Good morning. Welcome beyond the SEAF model. I'm Jack Kosar. This is effective for the week of April 28th, 2025. Let's get started. SEAF signals for this week. We retain utilities, but we add communication services and technology and drop financials and real estate. Overall, you can see we have some relatively high scores. I'm going to break down a little bit more on the heat map, but the overall theme here is we're kind of in a transitionary period. I have another chart to kind of provide some support for that. Some key things to take a look at is technology coming back as we go through transitionary periods, whether that's through bear markets, bull markets, uptrends or downtrends. We do look for some leaders. Oftentimes leaders on uptrends or bull markets, not to say that we're in a bull market, but as we're trending upward here, looking for that leadership from technology. I'm going to take a look at utilities, especially at the rainbow chart. Is this the emergence of a new trend for utilities, or are we taking a little bit of a break? And last but not least, taking a look at energy, as we do continue to see some attempts for energy to kind of go, so to speak, but we can't seem to get those rallies to last anything more than a week or two, and energy sits here toward the bottom. Going into our heat map, in general, just bringing up last week, we had a 3.4% increase in the AUM of all 11 sector spiders, if we're taking that as a whole instead of individually, with 4 straight up days, 3 of which were over 1% increases day over day. We opened the week last week at a 2.5% decrease in the overall assets under management for all 11 sector spiders, but quickly erased that again for 4 straight up days or 3.4% increase in the total net assets of all 3. As I said, we're in a bit of a transitionary period. So we have greens and reds and yellows kind of all over the place here. This is not the trending map that we tend to look for when we're really rolling, but this version of the heat map does often happen during these transitionary periods. Technology, communication services, which tend to be our offensive sectors, have moved their way up from the bottom half to the top half with some really strong numbers, especially for technology, coming at 0.8% on the trading week. This is a little bit whipsawy for technology in terms of up and down, as the market has obviously been a little bit extra volatility with what is the inconsistent message that's coming out of Washington. But if we can kind of keep pushing through, if there's a new normal to be established and the market is going to take another leg higher, it will be on the back of technology, and we are seeing a little bit of a conviction bet heading into that technology. Technology being obviously dragged down by its tough strategic quarter, but overall showing that positive momentum that we were seeing. We are going to take a little bit look at consumer discretionary, which has a positive change, going from what is a deeper negative in the strategic quarter to, even though it's the same number, we're seeing obviously a lot lighter flows here, to a positive flow or a 2 on the trading week. So we'll take a look at that as well. But again, overall, seeing that transition more from that defensively oriented to now a little bit more offensively oriented. And the question will be, is utilities going to continue to act like an offensive sector like it did in the much part of the later half of the fourth quarter of 2024, where it was really being tied to technology and the CapEx expenditures on AI, or is it going to go back to being a defensive sector? We won't know until we start to see if this is just, again, a break on trading after a little bit of a run up for utilities, or if this is going to be defensively or and get itself kind of falling down a little bit more down the path. Heading into our rainbow charts. Communication services, we were a little bit of an avoid here, came up, and now we've started to push ourselves in upper favored. We haven't seen the real overextension in terms of its relative performance versus SPY. A lot of that has to do with the overall, while they are higher scores, 3, 5, and 3 respectively through the trading, tactical, and strategic quarter. The flows have been green, but not overly aggressively strong. So we would be looking for communication services to kind of really take itself up from that light favorite to the upper favorite area with some couple of strong flows. Now it is got the nice flows over 3 time periods, which has it second ranked for this particular week. But in order to really get that relative outperformance strength, we do need to see this kind of shoot itself up into the upper favored, as it did here. We went from neutral into favored, and really kind of picked up that juice as we started getting into this upper favored. So look for communication services to continue this trend and kind of jump off, as long as nothing mechanically in the market changes from now to next week. I wanted to just take a look at energy. So energy's really been trading in a sideways market here for the better part of a calendar year. We've attempted to break out multiple times out of this box, but have not been able to sustain the momentum here. We had a little bit of relative outperformance upward tick here last week. Obviously only got itself up in a neutral. That has then sputtered out. We're back into deep avoid. It's actually, 11s across the board, so it's the worst ranked sector with negative 0.44 on the trading week outflow, which is over 0.4, which is significant. So energy continues to struggle. We did not get that extra push that we could have liked if energy was going to take off. So energy remains at the bottom and is really just trading in this box it's been trading in for the last year. Going to technology. Obviously, technology's been kind of the most whipsawed sector that we've really had in terms of going from a deep avoid to a upper favored. We had a similar move here. We were relatively deep avoid, moved up into neutral. Now we're sitting in a favored of course of a week. Nice relative outperformance. That is on a very strong weekly trading at 1 with a 0.8% increase due to kind of in the way that we calculate weekly changes. So sitting up here in the favored. And again, not to say that we know what's going to happen next week, but nice strong flows. If we can get some sustained ones and get this into upper favored, technology could really take off after it's been in what really is a downtrend coming from June of last year down to where we are now in terms of relative performance versus SPY. So looking for that technology to potentially take us as the leader going forward. I'm going to bring in kind of the little bit of support that I have. As SEAF has shifted really to being more offensive now, this is coming on the back of what we have here up top is I track the total net assets in the 11 sector spiders as an aggregate, if they're all added up together. And in general, when we are showing above the 21-day moving average for these asset flows, we have positive appreciation this is a price chart of the S&P 500 down here. So again, as long as we're above that 21-day moving average on total net assets, we tend to see price appreciation on the S&P 500 chart. Now, it's not one-to-one, it's not perfectly correlated, but it's in that direction. Since we have been underperforming for the better part since late February in terms of underperformance versus SPY in the S&P 500, which also correlates to us being under the 21-day moving average in terms of expansion or contraction in the assets under management. We have just broke that 21-day moving average for assets under SPY, and as you can see here, we've also now see a slight price appreciation above the price 21-day moving average. To also note, CPM went risk on last week, so things are showing. Our internals are showing that things are turning up positive. Now, is it possible this thing takes a header, later part of this next week? Sure. Again, we're not projecting out cash flows, but we're starting to see an emergent trend. Breaking that 21-day moving average is a big deal. We attempted to break it 2 times earlier and really just never made it too far above regarding price. So the fact that we've had established, I think it's 2 days now above that 21-day moving average, we're seeing we're starting to see a offensive alignment in our SEAF metric or our SEAF table, screaming some positiveness into this particular market. Again, not projecting, not counting on it, but just overall, tech is leading. We broke that 21-day moving average for our total net assets under SPY, just seeing some positive things. Other thing I want to bring up today, consumer discretionary. We are sitting in a neutral, but it was 2 on the trading week, 0.14%. Increase in assets under management in the way we calculate it. Now we are sitting here in neutral, and we really haven't seen any kind of major relative performance spike yet, but I really like to highlight when we see kind of the progressive going from deep avoid in terms of our 3 time periods. So, ranking of 9 in the strategic quarter for consumer discretionary to a light 9 in tactical month to now a 2 in the trading week. So again, not an actionable trade here, but just a sector to watch as we're starting to see the turning. Also, if we are going to have a bull market or a positive uptrend here in the S&P 500, consumer discretionary is a offensive sector. So just a place to keep your eye on. Nothing to do here yet, but just a place to track. Last but not least, just wanted to take a look at utilities. We are still in an uptrend in the relative outperformance versus SPY. This is going back to December or January, December of last year, January of this year. Nice positive uptrend. What we could be seeing here is a little bit of a break, exhaustion break, as utilities have been doing well over the last couple of weeks. This will be a place to watch. We had a little bit of weakness on the trading week. If that continues and it starts to bring us down to lower favored neutral, this might be the end of this trend, but this could also get rebounded and we can set up an upper favored next week. But again, this is a space to watch with utilities. It's kind of a make it or break it point. Utilities is sitting slightly above 3 major moving averages, the 21-day, the 50-day, and the 200-day. So it does have some support here at its current level. I don't have the price chart up here right now, just going off memory. But interesting place for utilities and, kind of a wait-and-see moment. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.